I'm going to reveal my personal strategy for not only surviving this market, but being able to profit during times of market volatility. By the end of this show, if you take all the information that I give you in this video and apply it to your own portfolio, I'm confident that you are going to have a significant advantage over other crypto investors. Let's get straight into the show. I'm about to give out some strategies which I think can really help you guys out in this market. So to show your support, please smash the like button for the YouTube algorithm. I want to see those likes explode. Can we get 4,000 likes on this video? Spread the love because, we're working hard in this market to give you guys strategies that can help you out during times of market volatility. Let's get straight into the show because I have some really important strategies that I want to go through with you guys. Now, the market right now has been shaky. We did see the Bitcoin price come down a few percent, but we saw a little bit of a bounce following the Microsoft earnings report, which came in more positive than expected. So the market isn't looking as scary as yesterday, as we saw some investors de-risking because of the uncertainty surrounding the NASDAQ. But obviously, it isn't where we'd like to be sitting. If we look at the charts, we are in shaky territory. So I really want to use this as a chance to get you guys up to speed with the strategies that you should be implementing during these times in the market. The first thing I wanted to touch on was actually Bitcoin user adoption. So it's important to sit back and really view the big macro picture, what is happening in crypto as a whole, in order to formulate our thesis. Now, Will said this is a little leak from his Bitcoin user report that he's doing with BlockQuest Solutions. And we can see here that this is where we are on the chart of the percentage of global population that is using Bitcoin. They use algorithmic models to work out how many people are going to adopt Bitcoin in the future. And I think it gives us a lot of perspective. I mean, if these models are anywhere close to being correct, it indicates that we still are quite early in this market. So we have to just step back sometimes, and realize we are quite early. We are the early adopters in the scheme of things. So as scary as the market is, we have to keep perspective. I think it's also very important to kind of shift your mindset. The bear market is when you make life-changing money. These are the moments when the market is down, when the market is moving sideways, where we can set ourselves up for real success. You make money in bear markets. You don't necessarily make the money in the bull market. The hard work is done now. So we have to stop chasing instant gratification and set ourselves up with a consistent plan that we can follow to achieve profitability. And Alex Becker made a very good point. He said that very people that joined the bull run after it started made life-changing money. Also, anyone who knew about .bnb, AVAX, or any top 50 coin, or what an NFT was, and was in hard during the bear, they're the ones that made 100x type money. So the bear market is where you change your life, not the bull. And he's kind of correct here. Like a lot of us did start getting into this market when the bull market really started to rage and when that frenzy started to kick in. But in reality, the people that made crazy money were the ones that were investing when the market looked dead, when the charts of those major alts like DOT, BNB, and AVAX looked like they were down and out. Those are the times when investors made huge money. He goes on to say that for the record, he thinks that this dip smells like the March COVID dip, that the macro scenario isn't that bad, that the world economy is coming back, and then he wouldn't be surprised if we rocket in the next few months. Now, I don't necessarily share the exact same view. I think it's very hard to predict exactly where we're going in the short term, but there is definitely a scenario where a lot of this sell-off is overblown, and we do see a scenario where we rebound. So I think it's important to be prepared for both scenarios and make a plan, and that is what today's video is dedicated to. So when the market is down or moving sideways, that is the perfect time to educate and put yourself in. So the fact that you're watching this video is already the first step completed. You're here, you're willing to learn, and that's fantastic. But the work you put in when the market is down is going to reward you tenfold when the market turns, and the effort that you put in during the bear market is actually more important than the effort that you would put in during a bull trend. But most people have this the other way around. Most people start really paying attention when the market's rocketing, but you should actually be doing the opposite of your emotions, because that's how we get the real reward in this market. So make no mistake, you should be grinding every single day in the bear market and chilling during the bull market. using the bull as a way to take profits, really reap the rewards, reap the fruits of your labor. Unfortunately, most people have this the other way around. So I want to give you some pragmatic strategies to actually make money in a market like this. Now, we want to start looking at tokens that can rebound the strongest and tokens that we want to be accumulating during the downtrend in order to come out ahead when the market inevitably turns. Now, Drake categorized these type of assets as having three characteristics. The first characteristics that assets should have, so things that you should be looking at investing in, they should have token value accrual. So the better the value accrual mechanism, the stronger the tokenomics. So something like a Luna has very strong tokenomics with its UST algorithm. Something like FXS with its Frax tokenomics and FXS burn has very good token value accrual. So with better value accrual, the price can now be a measurement for growth, and that's what the market believes as well. So I think this is a very important characteristic that tokens have to have, aka have good tokenomics, and that goes a long way in this market. The second thing that Drake says is a very important characteristic of investments in 2022 is multi-chain exposure. So if the asset just dominates one chain, then that does put up a little bit of extra risk, because if something happens to that particular chain, you could be exposing yourself to downwards momentum in the price. Nobody knows what the outcome of the chain wars will be. Just a couple years ago, people were talking about ADA coming out on top. And look what happened. Look what happened with the TVL on ADA. And look at things like DOT that people thought would be a really strong narrative. That still could potentially be good, but it just hasn't really blossomed in the way that people thought it would. And instead, chains like AVAX, Solana, Luna, and obviously Ethereum, Fantom, those are the chains that really accrued mass amounts of TVL. So make sure you have assets that follow this multi-chain narrative, because the future will comprise itself of multiple chains. So tokens like Rune, which is centered around multi-chain exposure, individual projects that are deployed across multiple chains, they're the ones that will do the best. And it does lower a lot of risk. So that's a nice bonus when we're looking at tokens to buy if they have multi-chain exposure. Also, the third point he makes is too big to fail. So it's important to invest in tokens that have a lot of infrastructure backing them. One, a lot of financial backing, but two, tangible metrics and users that are underpinning growth. So when an asset is too big to fail, for example, it accrues so many users that it's very hard to dethrone, then those are the type of assets that we should be looking at accumulating. So assets that move fast and have their fingers everywhere and are intertwined with everything will be the ones that make it. So an example of an asset like this would be a Solana. And I did, a nice thread on this yesterday when I went through some metrics on why I'm bullish on the future of Sol. And the reason I'm bullish on something like a Solana is because it's got the most active addresses by chain by far. So it's got real user growth underpinning the Solana growth. It's got a 14x on AVAX, a 4x on Matic. When we look across, the transaction volume on OpenSea for NFTs, it's an 8x away from the nearest competitor. And also it's got many tangible metrics that are underpinning it, like DEX volume, etc. Now, this is just an example. I think there are many amazing projects on the market, AVAX, Luna, Fantom, Arweave just being some of them. But something like a Solana is really representative of what Drake is talking about here, that investing on projects that are too big to fail, because they've got the FTX backing, they've got obviously Alameda research through Sam, and they've also got a lot of VC backing which underpins the growth of the Solana network. So that's an example of something that is too big to fail, and I think that is really, really important. But obviously, we can't just accumulate projects willy-nilly. You need cash to be able to get involved with these projects. You need buying power to accrue tokens during dips. And that's something that a lot of people forget, and they neglect the stablecoin portion of their portfolio. Well, right now, I'm going to make sure you never forget it again, because this is my strategy for stablecoins. I aim to have 25% of my portfolio at the bare minimum in stablecoins at all times. This gives me adequate buying power to actually take advantage and purchase these dips. So there's three ways that I'm actually doing this. One, I'm taking profits when projects go up in value. So when we're getting these pumps, I'm taking 50% of my profits into Bitcoin, and then I'm taking the other 50% and I'm putting it back into stablecoins so I can keep the ball rolling with accumulating some income to buy dips. The second thing I'm doing is I'm earning yield on my stablecoins. So I'm continuing to grow my stable positions through earning yield on them through protocols like Anchor Protocol. And the third thing I'm doing is I'm earning passive income outside of crypto, which I'm funneling back into crypto to top up my stablecoin balance. So those are the three things that you can implement and start doing today to make sure that you never run out of funds to buy the dip again. Because if I say buy the dip on Twitter, guys, and you guys say I'm out of money, well, that's on you. You have to have a plan. And I'm just being brutally honest right now. You have to have a plan to accumulate and keep topping up your stable reserves, or you'll simply get wrecked if we go into a downtrend. And one way that we can do this, and something I've really tried to help the community out with, is stablecoin farming. So I have teamed up with Donkey Finance, who are now an official show sponsor, link in the description, with my own stablecoin farm. So we've actually created my own strategy, which I'm tweaking every single week to help you guys optimize yield on stablecoins. So right now, my farm on Donkey is paying around a 27% APY, and we're utilizing strategies across Fantom, Beefy, Luna, to earn a nice stablecoin yield. Now, remember, there's always risks with yield farming and DeFi. Smart contract risk is something that's out of my control. But if you guys do want to get involved with the Donkey Farm and copy my stablecoin farming strategy, you can do so in the link in the description. There's a link directly to my farm, and it's as simple as depositing BUSD on the Binance Smart Chain network, and you can start earning yield on your stablecoins. And the real central strategy of this stablecoin farming is Planet Finance. So we're utilizing the power of their lending and borrowing vaults across their supply and earn tab, able to facilitate this AUST strategy. So if you want to check out Planet, there's also a link in the description to check them out, because they have some great farms. So those are just a couple things that I'm doing to accumulate stablecoins. But now you've got some stablecoins. Now you've got some money to actually buy the dip. Now you're generating some yield. Let's talk about the best ways to navigate this market utilizing DeFi, because obviously DeFi is one of the ways that we can really bolster our passive income and also continue to keep things ticking along and accumulating during downtrends. So I'm going to bring on SoundsTricky right now to join me on the show to go through some of the ways that we can look to accrue tokens through DeFi. Welcome to the show.
Hey, what's happening, Banter fam? Hey, Miles, how are you, man?
How's it going?
It's going really, really well. It's a bit cold here today, but that's okay. The day is starting good, and we're ready to rock and roll.
If you guys don't know, SoundsTricky and I have the same accent because we're from the same city in Melbourne. So it's funny, we're a world apart right now. I'm in the US and he's back at home, but we originate from the same place. So it's a bit cold.
Just like
in Melbourne,
being around at the local cafe when we hang out.
Yeah, when I'm back in Melbourne, we definitely have to link up. But you did a tweet, and I thought it was very insightful, and it's one that I think offers immense value to the community if we can really break this down right now. And this tweet is basically your 10-step guide to surviving a bear market and really setting yourself up for long-term success in crypto. So the point one that you made was sticking to the plan and having a long-term mindset. Could you just elaborate, what did you mean by this?
Well, I think overall, it's kind of like I come up with this idea or just this whole basis because, we need to remind ourselves every day about what we should and shouldn't be doing during these processes. And honestly, this kind of stuff, when I'm making it for, the audience and for the Banter fam and everyone else, more than anything, I'm making it for myself because even, we're in this all the time, we're researching, we're doing what we do, but you still have to remind yourself every single day to, to just maintain the course, right? Just stay on course because no matter what happens, nothing has changed. The only thing that's changed is the price action, right? And we believe in this stuff long-term. We love it. We're all in it for the long run. So these are the kind of things that writing them down will help you kind of just stick with it and then stay strong during the tough times. So that's kind of where this checklist came from. And that's why I made that point as number one, is just remind yourself every day, you got into this for a reason, you have a plan, stick to it, and eventually it'll pay off.
And I think you made a really good point there. You said if the fundamentals haven't changed and the prices change, then there's a bit of an opportunity there. I did a tweet earlier today and I said, just for a second, let's go back to the Fantom conference in October when Fantom was 348. The Fantom price is down 70% since then. But you have to ask yourself when we get dips like this, has anything fundamentally changed? And if the answer is yes, is that change enough to justify the correction that occurred? In the case of Fantom, that's 70%. If your answer is no, then you know what to do. Then you know there's an opportunity there to accumulate. If your answer is yes, then maybe the fundamental changes actually do justify the change in price. So just touching on Fantom for a second, because I know a lot of you hold Fantom. I think that, a lot of this stuff was overblown with Andre leaving Fantom, and he actually did speak today. And he did his first interview in a long, long time. And he said, technologically speaking, Fantom is such an amazing technology stack. It doesn't bloat infinitely. It has a beautiful time to finality. And the whole consensus layer is nearly written from the ground up. And we did that over 3 to 4 years. So if you guys don't know, Andre actually wrote some of the original code for Fantom. And he stayed on as an advisor, but he hadn't been involved in the project for a couple years. So obviously there was a lot of FUD when he said that he was leaving. But in reality, nothing really changed there. No fundamentals changed when Andre left the project.
Yeah, it's funny as well on this topic as well, because I actually, and prices dropping in relation to projects that you believe in, I had a buy order in for Fantom at $1 that I'd totally forgotten about, to the point where I didn't even have that account funded anymore. And I got a notification yesterday saying your buy order has failed because you don't have the right money to fund it. And I was just shocked. And it's just a perfect example of why, how things might change, but nothing's changed from a mentality point of view, because I was trying to buy it for $1.
That's hilarious. And you pre-planned that. So
I pre-planned it.
Interesting psychology, right? Because people might say, when Fantom was at 348, if we said to you, you would be able to pick it up for $1, you'd say, I'm selling the house. Like, where can I buy it for $1? Like, you'd just be mind blown, right? And then the price actually goes to $1. And then you say, no, I'm not buying it. It's going to go to 50 cents. It's like, if you have a plan, you got to stick to it. If you have a price target, it doesn't matter how your emotions are feeling, you got to stick to it. Like Solana is another example of that too. It came down heaps.
Within that though, like that's the problem, right? Is you wish that it goes to a certain price when it's higher, so you wish that it pulls back. But when it pulls back, you start getting scared that it's going to keep going down. But you need to fight that fear, because initially you had that thought, you wanted that price. So what happens now if that turns around? Are you going to be upset with yourself when it goes all the way back up and you've missed it at the price that you wanted to get in the first place? Like that's when you'll really be kicking yourself. Yeah.
So when you make a plan, you got to stick to it. And just on a little bit of Fantom news, there's actually something interesting. There's a proposal right now to change Fantom's monetary policy to make Fantom a more deflationary asset. So this could be an interesting announcement that comes out, could potentially change the tokenomics for the better. This isn't a Fantom show, but I did think it was a good example of psychology in markets, because it's one of the tokens that got hit the most. And just on your first point here, your first point of, coming up with a plan and sticking to it, I just wanted to say that, and this point is very important, so I want you guys to listen into this. Passive income is probably the most important thing you can be focusing on in times like this. So this is what I want to touch on. Basically, there's 2 elements of passive income. There's passive income derived from crypto, and then there's passive income outside of crypto. So firstly, passive income inside crypto is utilizing the power of DeFi to generate yield on your assets, 2, your stablecoins. So generating yield basically means you can be sleeping and earning passive income. So it's something we talk about, quite a while, for quite a long time, because you want to keep making income, keeping the ball rolling, and keep earning money. But there's one thing that a lot of people in the industry don't talk about, and I kind of want to, pull the wool off everyone's eyes in regards to this topic. Passive income outside of crypto is equally, if not more important. For example, as well as my crypto portfolio, I have income generating businesses. I have exposure to the share market. I have exposure to property, which generate me income regardless of what the crypto market is doing. So I know it's not what everyone wants to hear all the time, because everyone wants to become a millionaire overnight.
I'm the same as well. Yeah, I'm the same as well. I'm in that exact same boat, exactly the same as you are. So, it spreads across the board as well.
Yeah, and I think that's important, because if you have a steady cash flow that's coming in regardless of crypto, it means if the market starts dipping, you actually have buying power to keep topping up into your crypto without having to sell any holdings. And that's the truth that most content creators won't tell you. They want to sell you this false dream. And I want to be as transparent as possible that yes, you can make it in crypto. You can make millions, but income generated outside of crypto is just as important. Wouldn't you
Yeah,
agree?
exactly. Yeah, and it works twofolds as well, I reckon, because it means that you can buy things when the price does dip, and it also means that you're not forced to sell anything to grab your cash back. And that's super important as well, because sometimes not having to sell is important as being able to buy.
I agree. I mean, it's super important, guys. So, I mean, one thing you can start actioning now is coming up with a plan, whether that's in your career, in your businesses. Maybe you could start a side hustle. Come up with a plan to start increasing your income slightly outside of crypto. Or you can do the opposite, which isn't increasing your income, but it's watching your expenditure. Because a lot of people, obviously, they might earn quite a bit outside of crypto, but they're also spending too much money, which is, limiting their ability to funnel money into investments. So one of
Yeah.
those two things you can start actioning right now to start getting a little bit more passive income outside of crypto. But let's focus on what we can control inside of the market right now, because there are still massive opportunities for passive income inside the market. And you had a few good points here, 3 to 5, which kind of go through some of those strategies.
Yeah, I think with this checklist, it's more just about reminding yourself every day, right? Like we said before. But kind of 1 through 5, they're more kind of just little notes that you can kind of just address and put forth. I think a really good one that people don't know is you can turn off the value tracker in a lot of these portfolios, which is really cool, because that way you don't see the number. And if you see the number, your dollar figure dropping, it can play havoc with your mind and with your emotions and whatnot. So sometimes it's best just not to look at that, but also you can still see what you're accumulating and what you've got. So that's a cool little thing that I like to do, just as kind of like a mental thing. Keep track of your token count, which is super, super, super important, because if we're going to be structuring our portfolios to stack during a bear market, we don't want to know what the price is, but we want to know how much we've got. So figure out a way to keep track of what you actually holding and the amount that it's actually growing in tokens, not in dollars. And then also there's a really cool thing on DeFi Llama, which I don't know if many people know about. There's actually a watch list on there. So you can click and make a little watch list on DeFi Llama. And now this is kind of cool, because you can mark out, what I do anyways, I mark out the protocols that I've got my tokens locked in, and I kind of monitor their liquidity and their TVL. And that's just to make sure that nothing strange is happening. I mean, as the market goes down, everything's going to drop a little bit. But if something's suddenly bottoming out or there's having a massive fall, then that's kind of a little bit of a sign that maybe something's going wrong somewhere and it's worth looking into. And then that kind of leads into point 6, which is double check your staking strategies and double check that you're comfortable with everywhere that you've got your tokens staked. And this is super important, because if you start getting a whiff of a protocol that might be running out of cash, or the devs are starting to bail, or the TVL is dropping drastically for some reason, then it could be a good time just to pull your tokens out, just to be safe. And it's just something from a kind of, safety point of view that you want to keep an eye on, just to make sure.
And I think this leads into your 6th point really well. You want to double check your staking strategies. Make sure you're still comfortable with the protocols where your tokens are staked. And if there's any doubt, you can move them.
Yep. And move them. And don't be afraid to move them, because a lot of these protocols you can just get in and out of fairly easily as well.
So let's give an example with Pancake Bunny.
Yeah. There was a good example we came up with earlier, which was Pancake Bunny. So initially when I first got into DeFi, I had quite a bit of stuff staked on here. I used to stake my ETH, my wrapped ETH on Pancake Bunny. And you can see what's kind of happened to their protocol. Now, look, this is not fudding them. They're still operating and they're still going. But to me, that's a worrying sign. And that's not something I want to keep my cat or my tokens in when this type of thing happens. So you can see the way it just kind of, shot up and then it pulled right back. Now, someone's pulling their liquidity out, or a lot of people are pulling their liquidity out. There's got to be a reason for that. You may not know, but you can see it happening. So just monitor that to see what's going on.
Yeah, for sure. And I mean, and also the other thing off the back of that is make sure you're staying on top of your yield. So if you're in a protocol that was paying 30% yield, don't just neglect it for a month. Make sure you keep checking your LPs, because there's going to be times where you suffer potentially a lot of impermanent loss, or you've got a non-optimal staking strategy occurring. Like, there's been times where I've kept, say, my Solana in a farm that was only earning 5%. For example, on Saber, the rewards dropped from like 10 to 3%. When as soon as I saw that happening, I should have been adaptive and switched my Solana out for something like Tulip, which was paying 12%. So I think it's very important to just keep your eye on your assets, where they're being farmed, to make sure you're maximizing and staying on top of your yield. And the way to do that is just have a system every single day, every week, however much time works for you. Have a system where you routinely come in and check your farms to make sure you're optimizing yield. Because that's also really important in the long run.
I do Saturday mornings, cappuccino, sit down, go through my staking farms and strategies and just make sure everything's in check. And that's every Saturday morning, get up, and that's what we do. No more cartoons, just a bit of DeFi.
Best way to start the weekend if the market's green, and if it's tanking, then that's a good way to ruin your weekend too.
It is a great way to start the weekend sometimes. So should we look at 7? This goes into that pretty well, which I reckon is stake as many tokens as possible. It's pretty self-explanatory. You want to be staking as much as you can. And if you're holding tokens that you can't stake during this time, which means they're not giving you anything back, anything immediately, then you want to make sure that you really believe in these tokens long term, because you're holding them. If you're going to hold them and they're not going to give you anything back right now, you want to make sure that you're comfortable believing that they give you something back in the future.
So you have to be taking advantage of staking, basically. Like, if you're going to hold a token and you're just letting it sit dormant in a wallet, you're not maximizing your potential gains. And what actually happens is when the market drops in periods like this, you're actually accumulating at lower levels. So if you're continually accruing, let's say, AVAX through an AVAX farm, then when the price of AVAX eventually recovers, you're going to have more tokens. So you're going to make exponentially more gains if you were farming them during times like this. So you want to make sure that you're putting your assets to work. And also, if you've got assets that can't be staked and that you can't earn yield on, like a lot of these gaming tokens, for example, make sure you have genuine conviction behind them, or there's no point in keeping them if they're not earning you income. So something like a UOS and a Vulcan Forged, 2 of my favorite tokens, 2 tokens that, I have quite a lot of conviction in, but they're 2 tokens that you can't really earn great yield on. So I'm in them because I believe in them long term. I have conviction in the protocols long term, not because I can make, a short-term buck off yield. So just kind of make a distinction there between why you're in a token, and if, it's not serving the purpose of making passive income, then you got to have conviction.
And a lot of tokens can work twofold as well. So don't, like you can have, like, I believe in ETH long term. And so I've got that, but you can also find great places to stake ETH. You know what I mean? So it's a matter of kind of putting the two together. And when you can't earn the yield on that one token that you do believe in, just make sure you believe in it and you're happy to hold it. That's all.
And let's just touch on 8 real quickly, because it does tie into what you're talking about. You also want to kind of choose where you're siphoning off rewards. So if the market is mixed, so if you don't really know where the market is going, then you want to be putting 50%, for example, of your yield into stables, and 50%, into a token you're comfortable with. It might be Bitcoin, Ethereum, etc. And then you kind of want to tailor where you're taking your rewards. So let's say you're earning 50% a year off your Fantom. That 50% is now the yield you're earning is the yield you're playing with. So in a bearish market, you actually want to flip bullish. So when the market is low, that is when you want to start accumulating tokens, meaning say you have a Fantom LP, that's when you want to be converting your rewards back into the Fantom base LP to stack while the market's low. And then when the market is very high, it looks like we're reaching a top. For example, like when we're at 65K, that's when you start taking profits. That's when you start putting a lot of your investment, it can be any percentage you want. It could be close to 100%. I usually do 50% back into stablecoins. And you're actually locking in profits when the market's up. And that way you are giving yourself, stablecoins that you can use to buy back when the market drops again.
Yeah, we came up with these. Well, it must have been it feels like it was 4 weeks ago now, 5 weeks. It feels like a lifetime ago that we came up with these 3. Yeah. But I mean, how many times have we used them now? Almost every other day we go back to these and look at them. And I've got messages from people who have been like, thank you so much for doing it, because they're printing it out and they're using it as a reference every day. Just to help them through what's going on right now. And it's so true. It just, you need to have these visual references and these cues to pull you back into what it was without the noise just, overtaking your head and throwing you off.
And just to kind of, elaborate a little bit, it can be confusing because there's a bear on this, but when the market is bullish, that's when you follow the bearish strategy. When
Yeah.
the market is bearish, that's when you follow the bullish strategy. So you're doing
Yeah.
the opposite of the market. That is how you make money in crypto. And then when
Correct.
the market's mixed, so you're not quite sure, I would even argue right now is mixed, in my opinion, because we don't have great direction. That is when you're probably doing a little bit of both. You're taking
Yeah.
some stables. I'm following this one right now personally. Taking some
I'm
stables,
following
and
the other
then
one.
I'm also stacking some tokens as well.
Being the dirty degen that I am, I'm following the what is it? The back into tokens. I'm doing everything back in at the moment. So I'm stacking,
So you're following this this kind of
yes. Yeah.
bullish strategy. So the market's low,
Yep.
you flip bullish.
Yep.
You've got to decide yourself whether you think the market's bullish or bearish. It's really a personal choice. I think it's mixed. You obviously think maybe we're approaching levels where you want to accumulate.
I prefer accumulating when it's low. That's all I can say is, we've all fallen a victim to paying top dollar for a project and then watching it go back down. So when it's down, take the opportunity while you can. And if you're using everything that's staked, well, then just reuse what you're using, what you're earning as a reward. And that actually flows really good or really well into 0.9 because I'm a huge believer in, we stack stables, but don't deploy your stables until it's bad, really, really bad. And I don't think we're anywhere near really, really bad. And I'd be surprised if we even get to really, really bad. So right now, for me, I'm just using rewards to gain more tokens, which is rewards to gain more rewards. I've got a stable stash, but I'm not even deploying my stable stash yet because if it gets worse, I want to make sure I've got them. And in the meantime, I'm earning more yield on everything that I can just use to get more tokens now.
I'm similar. I'm doing a little bit of DCAing now, just a tiny bit, maybe 10% of my stables, but I'm keeping the majority in stables for now because, the reality is it can get a lot worse. I think we are getting some decent entries, but at the same time, it can get worse, as you just said. So you want to be accumulating tokens right now via yield. So for example, on Beets, let's say you wanted to accumulate the Beets token. Instead of using your stablecoin balance to buy Beets directly, you can actually look across their farms. And because all the farms actually earn Beets, you can stake, let's say, stablecoins in this pool here. You can earn 22% in Beets. That way you're still accumulating the Beets token, which was your final objective. But in order to get there, you're doing so through stablecoins instead of just flat out buying Beets in the beginning. So I think accumulating tokens via yield instead of depleting your stablecoins is a really, really good strategy. And I think all these points are very valid. And if you want to check them out, we've got SoundsTricky's link in the description to his Twitter. So I highly recommend checking out his Twitter and looking at the strategies he posted because those graphics, I think, can really help you guys out during this market.
Yeah. So do you want to have a look at 10 quickly? Because it kind of carries on from all of that just quickly before we
can
wrap
look at
up.
10.
So it kind of covers what we just said, but the way I like to do it is during these times, I'll swap token for token. I won't go back into a stable, but what I'll always try to do is I'll try to swap the token that has lost the least for a token that has lost the most. And this strategy here kind of spells it out. Now, the idea behind this and the reason why I came up with this was because things change differently in the market. And one day, for instance, in this graph that I've made, you'll see that in this example, let's say ETH drops 2% and Matic drops 12%. If you've just earned some free ETH from staking it, you transfer that free ETH into Matic and effectively you're getting 10% more, right? So you're kind of using the percentage drop and the percentage difference to your advantage. Now, you want to be doing this in tokens that you believe in long-term. In this example, I do believe in both of these tokens long-term. So I'd be happy to swap one for the other. And this is a great way to accumulate more. And that's the goal, right? Is to get as many as you can so that when we do start pumping, we start making some money.
So, I mean, basically, the essence of this strategy is you're using reward tokens that drop the least to accumulate tokens that have dropped the most because the goal is accumulation in the long term, as you said. Our focus right now should be to accumulate not as much money as possible, but as many tokens as possible. Because in the long run, tokens are going to equal money once the market recovers. So your priority should be earning tokens. And that is exactly what I'm trying to do in this market. And I hope these strategies can help you guys because I think there was a lot of alpha to dissect in this video. In fact, it might be a show you need to watch 2 or 3 times and really take screenshots and dissect, because there was quite a lot in there. That's good. So if you enjoyed the show and the strategies we gave you, make sure you smash the like button. I want to see the likes explode on today's show. And I'm also going live on Twitter right now. So if you guys want to continue the conversation, I'm going to answer some questions live, because I know you guys probably have a lot of questions with what I just told you about. So if you want to ask me any questions, I'm going live on Twitter right now. Link in the description to check it out over there. Thank you so much for joining the show. Sounds tricky.
My pleasure, man. My pleasure. Thanks for having me again. Thanks, Banter fam. Stay strong. Look after yourselves and look after your token count. Ding, ding.
We'll see you in the next show. Have a great night. Peace out.
Thanks, everyone.
Good show, I think.
That was awesome.